The 1099 DA is going to shake up the crypto world. Some people say it might even ruin the crypto world. I'm going to break down what it means for you and your portfolio in this video. The 1099 DA is a new form dedicated to digital assets that's supposed to be dropping in January of 2026. There's already a ton of different 1099 forms that you can get, so why should you even care? The 1099 MISC, 1099K, and 1099B only provide partial information for crypto investors. The 1099 DA aims to solve those issues by giving more information about your gains and losses. While the 1099 DA is solving the problem of having crypto investors getting more information about their taxable exchanges, it is also giving that same information to the IRS. This gives the IRS much more firepower in who they go after in an audit. The IRS recently released draft regulations talking about who has to provide this 1099 DA form. The regulations require that all brokers have to collect information on their customers and file these reports to the IRS. The question is, who is a broker? The new IRS draft regulations define a broker as anyone who can reasonably obtain the information of their customers. This would not include someone who creates a smart contract and abandons it or is creating money, not making regular updates. But there are plenty of decentralized tools out there that are making regular updates and keeping up to date with their customers. These would also have to report a 1099 DA. What they don't consider a broker is miners or validators, software developers, or people who create smart contracts and just look to gain some extra income, but abandon the contract altogether, don't really look to update it or keep up to date with customer information. Decentralized exchanges like Uniswap or SushiSwap fall into this category of broker under the IRS regulations. This would mean they would have to collect information from their decentralized wallet customers that they're facilitating transactions for and report that to the IRS as well. The 1099 DA is probably going to look a lot like the 1099B reported by places like Robinhood or Fidelity. The 1099 DA is going to report different sections of your cryptocurrency activity. This could include ordinary income from staking or interest on centralized exchanges. This could also include capital gains and capital losses that you do from transactions on the platform. We know the original goal of the IRS and the 1099 DA was to have different exchanges communicate with each other on the cost basis, acquisition date of these cryptocurrencies when they're transferred from one to another. The issue is that's unprecedented in IRS reporting. There has never been different exchanges or businesses reporting basis or proceeds to one another. Issues are still going to arise when you transfer crypto between an exchange or a wallet that does not have a reporting requirement and one that does. For example, if you are active on Coinbase and KuCoin, Coinbase is in the US and will have this reporting requirement. KuCoin is not in the US and won't have this reporting requirement. So when you're transferring something from KuCoin to Coinbase, Coinbase has no idea of what that asset was actually bought for, and you have no idea what to pay in tax for because KuCoin won't tell you your tax requirements. US-based brokers definitely need to report how much incoming cryptocurrency is coming into the account from interest or staking. They also need to report capital transactions, how much proceeds are on the transaction, what is the cost basis, and what is the net gain. Brokers need to also report what transactions did not have cost basis associated with them. For crypto investors, it's best to get ahead of this and report your crypto. You can use a software or you can come to us here at the Gordon Law Group. We can help you prepare for before the 1099 DA comes out and prevent any audit risk or underreporting. My name is George. If you have any other questions about the 1099 DA, please leave your questions below. I'll try to get to them. We'll see you next time.